I know you're surprised, but we got a bunch of headlines driving the market here today. China striking back 84% tariffs. You got any kind of like message for the group here? I know there's a lot of uncertainty out there, a lot of fear. You got any words of wisdom from your years of experience?
All right, you can do one of two things here, okay? You can buy into the headlines, you can get all wrapped up in this, you can get emotional. Emotion breeds stupidity, okay? And stupidity breeds massive losses. So let's avoid that particular impulse. Charlie Munger once said that the secret to getting rich is being sane when everybody else around you is insane. We're in a market right now that and it's very politically driven. It's all messaging. It has nothing to do with earnings. It's got nothing to do with anything but that magic word, tariffs. Any announcements by almost anybody involving tariffs can and will move this market on a dime. You got to be smart, okay? You've got to have your list of stocks ready to go, things that you want to buy, and when you get big booms down, it looks like we're going to get a little boom this morning, down 600. I just saw the futures, I think.
We're actually pared some of those losses back here, down 483 here. S&P futures continuing to tick higher.
Okay. So maybe we'll pick up some points this morning. That'd be a welcome respite change for a lot of people. We're seeing signs of cracks in the credit market a little bit, and I see some folks are asking about different stocks that we've recommended, and we are seeing some cracks, but they're viable cracks. And I told you the story, Ryan, that about Joe Riley at Tweedy Brown, and it's a story worth repeating for anybody that wasn't on our call last night. During the Cuban Missile Crisis, everybody, of course, was just like on the fascinated. They're in front of the TV trying to figure out if the world's going to end or not. And that was true on Wall Street, true. So at Tweedy Brown, the old value investing firm, everybody's in the office. They've got the black and white TV. They're just hunched over it, waiting for Cronkite to tell them if they're going to die by lunchtime or not. Howard Brown, the senior partner, goes out. Some errand, comes back. Everybody's still around the TV. Nobody's doing anything except one partner by the name of Joe Riley. And Joe Riley is in at his desk, and he's got a couple phones going, and he's just buying stocks like crazy. Now, Tweedy Brown was known for, they were a Ben Graham style firm. In fact, they started life as one of Ben Graham's brokers back when the firm was originally founded. So he's just buying all these illiquid, heavily discounted stocks. And Howard Brown looks at him and says, "What are you doing, Joe? I mean, it's nuclear war. This could be the end of the world." And Riley said something along the lines of, "That's exactly correct. It could be the end of the world. And if that's true, nobody's going to care about the performance of our stock picks, I promise. However, if this resolves, these stocks are going to make us an enormous amount of money." Now, that's kind of the approach you have to have in this kind of messy, ugly market. Now, the other thing that you need to keep in mind as you're doing this is that we started this with the market at a 30 multiple, with the market cap to GDP over 200%, with a CAPE ratio of over 35. So the market wasn't cheap. So the one caveat that I put on all of this, particularly when you're looking at some of the really large cap stocks, when you're tossed out the window of a 70-story building, passing the 35th floor is not a reason for celebration. Okay? So there could be more price weakness ahead of us. You need to keep that in mind. You need to really focus on a margin of safety, both in valuations and in the credit condition of the company. If you get those two things right, you should come out of this with an opportunity to make just an absolute enormous amount of money.
Okay, so it sounds like you're saying stay the course and be calm, don't panic.